This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone, to Not Your Advisor with NYU Grad on Monday, May 20th. Hope you had a wonderful weekend. I consumed a lot of financial content as well as sports and enjoyed some of this beautiful weather. But I digress. Let's jump right into the session. It was a fairly light day again, under 40 million shares traded on the SPY. But, I love you guys, so I wanted to keep doing the podcast despite lack of volume. We had 1,134 new highs versus 158 new lows. 49% of stocks were advancing versus 46% declining. 31% of shares were below its 50-day moving average, and 29% of shares were below its 200 moving average. That's about par of what we've been doing for a few sessions last week. Now, let's just jump into the indices. The Dow closed at the low of the day down 0.49. But JP Morgan was the culprit here. JP Morgan was down 4.5% on rumors that Jamie Dimon will potentially accelerate his retirement from JP Morgan. And that's what caused that sell-off in JP Morgan and the Dow. The NASDAQ pretty much traded very narrowly, up 108 points, up 0.65%, but it was in a very tight range pretty much all day after going up 0.5%. And then the S&P was marginally up. It closed near the previous close. It was up $4.86 points, 4.86 points. Nothing burger on the S&P. Looking at mega cap land, you had Microsoft up 1.2%, Apple up 0.6%, Google up 0.6%, Meta was down 0.6%, Amazon was down 0.6%, Nvidia, as well as all of its brothers and sisters in semiconductors were all green today. As I posted on Substack Notes, we are all preparing for the main event, NVIDIA earnings on Wednesday, as well as FOMC minutes. For those that aren't familiar what that means, it's basically the notes of the FOMC meetings coming out on Wednesday. Looking at sectors today, technology led to the upside. It was up 1.16%. Then you had basic materials up 0.5%, communication services up 0.3%, industrials up 0.3%. And then the rest were in the red, but financials led to the downside, obviously, down 0.86 with the Jamie Dimon rumor. Then consumer defensive, down 0.7%. Real estate, down 0.6%. Consumer cyclical, down 0.46%. The 10-year yield continues to be sticky at 4.44%. So continue to watch yields. Now, one of the things that, as you know, I try to avoid during the weekday, during trading days, is consuming too much financial content. And one of the reasons why is, one, I don't have time because I'm watching the market and creating content myself. But number two, I try to minimize my own biases. And I posted something on Substack Notes that I wanted to share again in the show notes of confirmation bias. There have been studies done. You can do your own research, but typically, I think even outside of the world of trading or stocks, we all as human beings have this desire to be right? It could be something very innate from our childhood, seeking approval from our parents and our older siblings. We just yearn to be right versus being wrong. And obviously school and grades and tests all leads to this built mechanism in our brain to be right or wanting to be right. So one interesting thing is in trading especially, and you might be listening to podcasts, you might be reading and listening to my podcast, you might be reading books, you might be on X Twitter, you might be on Substack, Bloomberg, CNBC, whatever it is. What you'll find is you will gravitate towards articles or subjects that you already agree with, and you're looking for confirmation to seek that you are right. Because it feels good, right? So that's something to be very cognizant of, and and know that that's a danger. So as long as you know that that is a danger, you can seek confirmation bias, but you should also seek counterpoints to your own confirmation bias, right? I'm very cynical. I don't trust people. I don't trust things. I don't trust establishment. So I know this about myself, and I lean towards more bearish because of this, right? Because I doubt everything. I doubt the rally. I doubt this. So it's important for me as a trader to seek content, professional help, right? To seek content that is counterintuitive to my own biases. I'm not trying to brainwash myself, but it's important to see all possible outcomes, because when you have too much conviction, when you're one-sided, that is the side that will cut your portfolio and your profits. So it's very dangerous, and just be cognizant of it. And as long as you are self-aware of what you are already leaning towards, it's important to seek confirmation, affirmation, but it's also important to seek those who have opinions that are totally opposite of you. Like if you're bullish gold, you should start seeking things that talk about why gold will go down, right? That's all. That's my point. So I'm gonna post 2 videos in the show notes. Both are for J.P. Morgan and Jamie Dimon. A few days ago, and both are from Bloomberg. Right? I think Bloomberg does the best out of all the financial news channels. Emily Chang, I think, did a much better job on. It was more of a puff piece on Jamie Dimon. It was like 22 minutes. I'll post that. But the more recent one, Francine Lacroix interviewed Jamie Dimon, and it was like amateur hour. I don't know. I don't really watch too many interviews of Francine, but she seemed so nervous, and it was just like hanging on every word that Mr. Dimon was saying. Like, are we gonna get a rate cut? Are we gonna get a recession? Tell me, what does that mean? Huh? What does that mean? And it was just like, whoa! Like I'm just so shocked that could have been much better, but the contents of that interview and what Jamie Dimon said is worth the watch. And as you all know, I've been also layering in credit spreads into some of the long-term indicators that I follow for the premium members. And he brought up credit spreads as a potential barometer of risk increasing. So if Jamie Dimon says credit spreads is a signal, I'm for sure going to include it in my research and my analysis. So let's keep going here. So one thing I want to note about JP Morgan, I know it was down 4.5%, but if you look at the lifetime chart, we broke out of a upper channel wedge, and I had noted once we broke out of that, like right about 195, I said, I don't know how much longer JP Morgan stock can live above this breakout, because it is a lifetime wedge trend line. So as soon as like maybe 4 or 5 sessions after it broke out, it tucked its tail and gapped lower to like 180, and then we tested the wedge trend line again, and then we finally broke out again, but we elevated to like 208, and then on this rumor that he might be retiring, we fell down the elevator shaft, and we are literally backtesting the breakout of this wedge trend line. So let's see if this signals the top for JP Morgan until they say who's going to replace him, etc. But something to watch as I take a sip of this Malbec. Okay, let's keep going. So I do want to make a big shout out and a thank you to Lisa, who is a paying subscriber. She was very kind to write me a testimonial. I'll just read it real quick. Quote, I have been a premium subscriber for less than 2 months, and NYU grad's discussion of the long-term cup and handle chart on silver was compelling to me. My position in silver has already earned me multiples of the annual subscription fee. Totally worth the investment, end quote. Thank you, Lisa. I totally agree. If anything, this will be entertaining. So thank you, Lisa, for that testimonial. If you're a free subscriber, thank you very much. Please consider upgrading. You can check out all the testimonials on the top of the navigation where it says testimonials. But another piece of content that I came across over the weekend that I absolutely loved, that I will also share in the summary of the day section of the show notes, was a master's in business. This is like an advertisement for Bloomberg. I listened to the podcast Masters in Business. It's run by Bloomberg. They do an excellent job. And Barry Ritholtz interviewed Jim O'Shaughnessy, and they talk about a lot of things like quant investing and building a quant business and etc. and AI. But the quote that I love the most about this, and I totally agree, is that arbitraging human nature is the last sustainable edge in investing. And, it really was the first. And, my takeaway from this was coming from him, who built history of successful trading via quant and quantitative models. They've pretty much all the quants and the algos and the CTAs, they've squeezed all of the secret sauce out of the market, right? It's very hard for you and me to compete against, BlackRock and Goldman and all of these algo traders, because they are trading milliseconds, and because the banks and the sell side are all connected, they can pretty much front run all of our trades. Like when you have a stop loss order or when you're about to buy 100 shares of Apple, like they see all of the order flow, right? Or they can create fake bids. They can say, oh, we're going to create thousands of bid orders that we actually are never going to execute, but we're going to use that to move prices, right? Like there's no way you and I can compete on that level as an individual investor or trader. And I've always said, if you've been a long-term follower, our advantage, which is also a disadvantage, you turn your disadvantage into an advantage, right? Like Sun Tzu, Art of War, is our lack of size. We don't have to be fully invested all the time, right? And because our lack of size, we get in and out whenever we want. We don't always have to hold. We don't always have to hold for 15 years and wait. We can just pop in and out like a ninja, like my avatar. So I totally agree with the sentiment. Arbitraging human nature is the last sustainable edge in investing. And if you follow me, auction market principles, trading balance areas, the market facilitating buyers and sellers for a long time frame or volume is the human nature of a market. And you want to trade when there's potentially an imbalance of those emotions approaching. That's all I'm doing. That's all I'm teaching my paid subscribers. So definitely consider upgrading. I promise you, you will look at stocks and investing in a completely new way that I've never seen anyone teach on CNBC or Bloomberg or Substack or X. So that's my soapbox. But I have the link to the full interview of Jim O'Shaughnessy, as well as a short, less than 1 minute audio clip that you can click on and listen to But I highly recommend that when you have the time. So let's go through what was strong and what was weak, and we'll wrap it up for the free members. So what was strong today? You had VinFast Autos up 29%, Marathon Digital 14%, MicroStrategies 9%, BITU 8.6, Coinbase 8.5, Sweet Green 6.5, Sprout Social 6.2, Bitfarms 4.8, FBTC 4.4, IBIT 4.41, GameStop 4.1, Kava 4.1, Pan American Silver 3.7, FAZ 3.69, Harmony Gold 3.5, LRCX 3.2, Netflix 3.1, App Lovin 2.5, FNGU 2.5, Nvidia 2.49, SKF 2.47, Silver Futures Contract 2.4, Beazer Homes 2.3, Semiconductor Philadelphia SOX 2.15, Roblox 2.1, PJT Partners Private Equity 2.09, SMH 2.06, DRV 2.05, Qualcomm 2.01, Kinross Gold 2, Uranium 1.99. That's all percent, by the way. It just goes by faster than me saying percent 20 times. What was weak? SBIT 8.82% down. Kura Sushi down 6.8. Sox S 6.33. Biddy 4.47. Instacart 4.41. Yext 4. Roku 3.5. Lyft 3.3. New York Community Bank 2.9. DoorDash 2.95. Natural Gas Futures 2.7. Dell 2.72. Affirm Holdings 2.3. SQQQ, that's obviously short the Qs, 2.11, and Rivian down 2.1%. What to watch? Keep watching Mag 7. Keep watching semiconductors leading up to the NVIDIA earnings on Wednesday. The FOMC minutes comes out Wednesday as well. I have links to a Twitter/X user TripleNet Invest. That is a new link. It's basically he or she focuses on the commercial real estate collapse that's happening all across the country. And if you love to doom scroll commercial real estate, I highly recommend that user handle. I'll also link economic data calendar, TrueUp.io tech layoffs, credit card delinquency rates, Indeed.com jobs openings, which continues to go down, and the true rate of unemployment, which is over 24% right now, not the BS 3.8 BLS numbers. Free members, I will see you all after the Tuesday session. Just a bit of housekeeping. I may take Friday off just because I suspect we're going to have very light volume and very low activity all week, but I'm potentially going to take this Friday off for Memorial Day weekend. Just a heads up. I will see you all after the Tuesday session. For premium members, please stay on so we can go through some mining stocks. That's my train.
Stand clear of the closing doors, please.